Welcome back to Investing Talk Podcast.
Today we're looking at Perpetua Resources.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. Perpetua Resources. It really presents a unique and compelling proposition.
It does.
We are looking at a development stage resource company, which, that immediately tells us we need to shift our focus.
Away from current revenue.
Exactly. We're not talking about that. We have to look entirely at the massive sort of strategic potential that's tied to its main asset.
Absolutely. And the core of their valuation rests squarely on that one massive asset, the Stibnite Gold Project.
Right, Idaho.
This isn't a small endeavor either. We are talking about an 11,548 hectare site.
Huge.
And the primary goal is the extraction of high-grade open-pit gold deposits. But it's not just gold.
No, it's not. They're also focused on recovering silver and, maybe most importantly, antimony.
Right. So right now, the entire company mission is centered on, clearing those permitting hurdles and then executing the construction.
And that's the capital-intensive bridge to eventual profitability.
Exactly.
And because they are still in that pre-revenue phase, the income statement, it offers very little insight. An analyst has to move straight to the balance sheet.
Looking at cash reserves and capital structure.
That's it. You have to gauge the execution risk. And what stands out immediately is how much their financial foundation was fortified in late 2025.
Following that series of really strategic capital raises, that's the structural difference, isn't it?
It is. We saw a substantial public offering that pulled in, about $71.2 million?
Yeah, but the real game changer was that massive $255 million strategic equity investment announced back in October 2025.
And when you see names like Agnico Eagle and JPMorgan Chase committing that kind of capital,
it's way more than just cash.
It's a tremendous, an independent vote of confidence in the project's viability.
It speaks volumes about credibility.
This level of institutional backing, it fundamentally alters their risk profile. It means they're proceeding with a war chest that lets them avoid taking on substantial debt.
Which is the traditional pitfall for developers in this sector.
It is. Their capital structure is clean, so they can reinvest their projected cash flow directly into accelerating that development timeline.
And we are seeing that confidence convert into tangible progress on the ground. They are stacking operational wins.
They really are. The U.S. Forest Service issued that pivotal notice to proceed back in September 2025.
For any major mining project in the U.S., clearing that regulatory hurdle is just a colossal validation.
That notice to proceed was arguably the single biggest de-risking event of the year. And beyond that, the technical roadmap has been validated by specific partnerships.
Like the deal with Hatch.
Right. They secured a $4 million equity investment from Hatch, who they also hired as their EPCM contractor.
Can we just unpack that EPCM relationship a little bit? What does it mean when a contractor invests in the project they are actually managing?
Sure. So EPCM stands for Engineering, Procurement, and Construction Management.
Okay.
These contractors, they oversee the massive logistical and technical undertaking of building the mine.
Right.
So when Hatch, which is a major global firm, not only takes on the contract, but also puts $4 million of their own money into equity, it creates a crucial alignment.
They have skin in the game?
They have skin in the game. Their profitability is no longer just tied to management fees. It is now directly tied to the ultimate success of the Stibnite Gold Project.
That structural alignment is really smart. And we're also seeing federal priority woven into this, right? With the defense grants?
Yes, up to $22.4 million earmarked for the project. That signals that this resource is viewed by Washington as, essential.
This is the structural differentiator, then. We need to focus on how this dual commodity strategy plays out.
Because the project is twofold.
Yeah.
Stibnite promises one of the highest-grade open-pit gold deposits in the United States.
Which is great on its own.
It is. It positions them well in the precious metals market. But that's only half the story.
Yeah.
And maybe the less interesting half when we consider national security.
The antimony angle. This is the crucial point that elevates Perpetua Resources beyond just a standard gold play. This is their competitive moat.
Exactly. Antimony is the real aha moment here. It's classified as a critical mineral, and right now the global supply chain is overwhelmingly dominated by foreign markets.
Mainly China and Russia.
Right. And the Stibnite Gold Project holds exclusive access to the only known viable domestic U.S. antimony reserve.
That's a staggering claim.
Right.
The only viable domestic source. Why is antimony so vital for defense specifically? I mean, what does it do?
It has several critical applications, mainly related to hardening alloys and controlling heat and friction.
Okay.
For instance, it's used to strengthen lead in armor-piercing ammunition, and its compounds are crucial as flame retardants in military equipment, wiring, even uniforms.
So securing a reliable domestic supply chain for this material is a top priority for the Department of Defense.
A top priority. And that strategic necessity transforms Perpetua Resources from simply being a mining company into potentially a long-term strategic supplier to the U.S. government.
That's why we see the federal grants.
Precisely. And it's why they've partnered with institutions like the Idaho National Laboratory. Their collaboration focuses on advancing modern mining practices, site restoration, optimizing recovery techniques.
Cementing their position as a national asset. So when you connect the dots, the massive institutional funding, the permitting hurdles being cleared, and this huge national security angle, it's no surprise we are seeing significant momentum in the market.
Momentum is definitely running high. Looking at the price action over the past year, we've witnessed a powerful 132% share price surge.
Wow.
That's not just incremental growth. That's a rapid repricing of the stock based on the systematic removal of project risk throughout 2025.
And the stock has been trading pretty strongly around, what, the $23 to $26 range?
Yeah, following that flurry of pivotal news.
So what specific events have really driven this sustained bullish sentiment?
Well, the primary drivers are the tangible, concrete steps they've taken. First, the permitting approvals we just discussed.
Right.
Second, hiring Hatch as the EPCM contractor, plus their investment. That signaled readiness to build.
And third, the actual project groundbreaking in October 2025.
Exactly. That confirmed this project is out of the conceptual stage and into physical development. These are concrete steps, not just promises.
And the analyst community, they seem to agree that there is still room to run.
They do. Analysts are reinforcing the bullish case with a consensus target price of around $32.
Which implies an additional upside of about 21% from recent levels.
Yeah, suggesting the market recognizes there's substantial value yet to be realized once they actually start production.
So if you're an investor watching this, what does the immediate future hold? Since they're pre-revenue, you can't really rely on typical quarterly earnings. What should we be tracking?
The immediate focus will be on their Q4 2025 and full-year results, which we expect around March 2026. The market won't be looking at revenue, but at key advancement indicators.
Like construction ramp-up metrics.
And structure metrics, updates on how efficiently they're using Hatch, and burn rate analysis to make sure that strategic capital is being managed effectively.
And all of this is happening against a macro backdrop that is extremely favorable.
Absolutely. They benefit from dual tailwinds. On one side, you have rising gold prices. On the other, you have this massive structural shift, especially in the U.S., towards supply chain security for critical minerals.
Minerals needed for both defense and clean energy.
Right, so this sector rotation, which tends to favor developers when rate cut expectations increase, plays right into their hands. They're ticking all the boxes at precisely the right time.
Giving them a strong first-mover advantage in the domestic antimony market.
Agreed. However, we have to pivot and assess the risks. No investment like this is without them.
Okay, let's address the elephant in the room that always concerns investors. Insider selling. We saw that cluster of director and SVP sales, about $2 million in early January 2026, right after that massive price surge. Doesn't that risk some short-term volatility?
It absolutely risks volatility, and it's important to look at that critically. But you have to see the nuance behind the sales.
So it's not just a red flag?
Not necessarily. While the dollar figures sound large, they primarily appear to be routine liquidity management and, well, profit-taking after a historic rally. And crucially, these sales were often paired with the exercise of stock options.
So they're locking in gains from options and then selling just enough shares to cover costs and taxes.
That's the key mechanism. The crucial detail is that in several cases, the net effect was still a net acquisition of shares.
Oh, that's interesting.
For example, one director netted over 7,500 additional shares, even after exercising and selling.
That does change the narrative quite a bit. It suggests routine financial behavior, not a loss of faith.
Exactly. If they were truly pessimistic, you'd just see outright open market selling.
Okay. Beyond that, the main risk remains the development risk. I mean, with the stock up 132% over the last year, has the market already priced in all the good news?
That is the perpetual challenge with a developer, isn't it? Trying to price tomorrow's success today.
Is it overvalued?
There's an argument to be made.
Yeah.
A triple-digit jump means a significant amount of future success, like the permitting win, is already baked into the current valuation. Any unexpected delay could cause a swift correction.
And on a project this large and environmentally sensitive, delays can come from anywhere.
Absolutely, that's a major risk. Despite the notice to proceed, these kinds of projects are constantly under environmental scrutiny and potential legal challenge.
So can their financial foundation mitigate those non-financial risks?
It can mitigate the impact of those delays. And this is precisely why those large institutional investments are so vital.
The $255 million.
Yes, it acts as a massive buffer. If there's a 6-month delay, their financial stability ensures they can absorb that hiccup without having to panic or resort to emergency financing. The risk of project failure due to financial weakness has been, dramatically reduced.
That is a powerful risk mitigation story. So let's bring this to a close. What's the final thesis for the listener?
Perpetua Resources offers a unique, compelling thesis centered on dual commodity exposure. It holds a Tier 1 gold deposit and, more importantly, the only viable U.S. antimony source, which is crucial for national defense.
And it's been de-risked.
Substantially de-risked by that heavy 2025 funding and the critical permitting wins, positioning them for a first-mover advantage.
But the listener has to understand the time horizon here. This isn't a short-term trade, is it?
Not at all. The valuation relies entirely on successful execution over several years. This is a multi-year hold, likely into 2027 or even later, until the first commercial output of antimony and gold is achieved. Patience is key.
And finally, a provocative thought for you to consider as you process this analysis. Given how critical and scarce domestic antimony is, the most compelling future catalyst might be speculative downstream processing deals.
That's a great point. If the U.S. government views this as essential, Perpetua could secure exclusive, highly favorable, long-term supply contracts,
unlocking even more value beyond just the current commodity price. So keep a sharp eye on any movement signaling a government partnership on that front.
We cover unique investment stories like this every week, analyzing the critical details you need to know. Make sure you subscribe to Investing Talk podcast so you don't miss our next analysis.